Hello, Facebook and friends. I'm going to give this a second to make sure that I have at least one person on and that you can hear me. Give me a like or a thumbs up or something to let me know that you can hear me because I'm doing this for the first time on my computer. There we go. Thank you, Jose. Okay, so today we are going to continue our education series on credit. And credit is not only important because of a mortgage, credit is important for everything, right? So in school, and this is one of my biggest pet peeves, is that in school, you're not taught anything about finance, credit, what a credit score means, why is it important, where does it come from, how do I change it, what is it based off of? I had a friend today ask me, she said, does the credit score come from like the ground or from the sky? Where does it come from? And what is a fair Isaac score? Why is it important? So what I want to talk about is that, one second. First question is, what does my credit score need to be to buy a home? Technically, we can finance a home from a score of 550 and up. Is that where you want to be? No. I mean, technically, to be in the good range, you want to be at 720 and above. To get into an FHA loan or something that is like a first-time home buyer, you really want to be at 620, but can we do it at 550? Sure, we can. Absolutely. So credit is a lot like anything else that you do. You have to start it to build momentum. Whether you are going to the gym, trying to start any new habit, if you do something repetitively, you're going to build momentum, right? So you start your first credit card. When you're 18, you want to start your first credit card. As you start your first credit card, your credit score is based off of how long you've had credit. Are you responsible with credit? How much credit are you using? How much credit is a company giving you in respect to how much are you using? For example, if you get your first credit card and you have a $1,000 limit, how much are you using of that limit? So biggest thing is that you want to always stay under 30% of what you are allowed to spend. So if you have a $1,000 limit, you really want to keep it under 300. If you go above, does that, is it going to affect you? Yes, you never want to go over that $1,000, but to keep the best credit score possible, you want to have credit for the most amount of time. You want to keep it under that 30%, so you want to kind of keep it under $300. And you want to keep that credit open. So your longest card or credit card or installment loan, which an installment loan would be a student loan, it would be a car or something that is fixed. So if you go and you get a $10,000 fixed loan, that's an installment loan. A revolving credit is credit cards. So revolving means that you have a card and basically that entity or that bank is going to allow you to have a $1,000 limit, a $10,000 limit, whatever the case may be, but they can change it on you at any time. And they're going to repeatedly soft pull your credit to see where you are. Is my client still, like as you as a consumer of the credit card, are you still being responsible with your credit? Are you paying everything on time? So on credit cards, you want to stay below 30%. That's a big deal. The length of time that you have credit is a big deal. And then you want to, hi guys. I'm loving the engagement here. So anyway, you want to pay everything on time. Another thing that I see that people have a misconception of is, and this is frustrating, is, okay, I've built up this debt, I've built up all these credit cards, I'm going to pay it off and I'm going to close the account. That's not the case. So you want to keep whatever revolving credit, which means your credit cards, usually whatever revolving credit that you have, you want to keep that open. You want to keep that open for as long as possible. And you want to show the Equifax, Experian, TransUnion, they're grading you again off of how much credit you are actually using as opposed to what you could, because that shows your responsibility. The credit score is based off responsibility. You don't want to close those accounts. You just want to refrain from using them, right? If you're trying to build credit, you want to use it, pay it off. Use it and pay it off. You want to pay everything on time. You don't want to open a lot of new credit at one time. And then on top of that, let's talk about inquiries. So another misconception, like when someone is going to shop for a home mortgage, I'll have people call in and say, well, I already went to ABC Mortgage Company. I went to some internet lender and they've already pulled my credit. I don't want too many inquiries. And that is true. You don't. But by law, as a consumer, it would be against the law for you not to, as a consumer, to be able to shop for credit. So I'll get someone who calls me and say, oh, I already pulled my credit. I don't want it to get hit again. They told me that if I have too many inquiries, that it's going to drop your score. Yes, but as a consumer, well, for a mortgage company, there's a certain code that is equated to that inquiry. So as a consumer, you have the ability to shop by law for 30 days with mortgage companies, and it only hits your credit one time. So if you ever see that not happening, that means they're going through another entity and they're not marking that as a mortgage score, and you can get that removed. Another misconception really is that you want to have a lot of authorized users. You want to be able to show authorized users. So for example, I had someone the other day, they had an authorized user on their parents' account, which is typical. I have 4 little sisters. On three of my little sisters, I put them on my credit card. On my credit card that has the highest limit that I've had for the longest amount of time since 1999. So I have them on my credit card so that it helps boost their score. However, if you're an authorized user for your parent or someone who is trying to help you build your credit, and they are overcharging, or they're over that 30%, 50% mark, or they're even overextended on their credit, that's actually going to hurt your score. So that's something that you don't want to do. If you check your credit and you have an authorized user, you want to get that removed. I had someone the other day that had an authorized user from her mother who had a credit card that was overextended. We were able to remove her as an authorized user, and her score jumped up 36 points. So she was at a 620. We were able to get her at the 656. On top of that, she had a credit card that was about a $5,000 limit. She owed $2,500. She was able to pay it down $1,000 and get another 10 points. So at that point, we were over 660. And what that means is every time you get over a milestone in credit, for example, 580, 600, 620, 640, 680, 700, 720, 760, 780, that's going to affect the interest rate that you're going to get. And that's really what it all comes down to. You want the highest score possible and be able to manipulate your credit report as much as possible so that you are presented as a better buyer. So let's say a 620 score might give you a 5% rate, where a 700 score could get you a 4.5% rate with no points, no buying down or anything like that. That could equate to thousands and thousands of dollars, and sometimes you can do that up front. So that's a lot of things that we do for our clients. Every time that we run a credit report, we do an analysis. We do an analysis and say, okay, you had this one late payment, or you had this medical claim, which, by the way, medical does not count against you in credit. You have this medical claim, or you were late on medical. You know, things happen. People go through divorce, people get sick, things that we see everything. They go through bankruptcy. I mean, we see all kinds of things. So the best thing that you can do is have us run it. most people, another thing is talking about running credit is people will say, oh, well, I went online, I Googled, and I said, I Googled check my credit, and they would go to creditscore.com, freecreditreport.com, Credit Karma, whatever, like, oh, no, I'm totally good. I have a score of 720. Credit Karma told me so. Those are not real credit reports. These are soft pulls. So when you are going to a mortgage company, we are pulling what's called a hard hit credit. So we are getting the actual score. Credit Karma and all these internet type of, it's good for knowing where you are, not the score. So if you're going to go to Credit Karma or freecreditreport.com or any of these internet type of credit companies, these are not hard hits. They're not real scores. They just use synthesizers. They use math, basically, an algorithm to predict what your score may be. And most often, it's going to be a higher score. It's kind of like using Zillow for your appraised value on your home. When you go to Zillow and you see your Zestimate, that's not the value of your home. You have to get an appraiser. You have to get an actual person to go out there and hard hit your house to get the actual appraised value. Just like with credit, you have to actually have a hard hit. That means that we have to pull from Equifax, Experian, and TransUnion in order to get the actual score. So whenever you're going to this, it's not that they're bad. It's good. You should have credit alerts. For example, me personally, I have one bad thing on my credit, and since I started my credit in 1999, and that was an AT&T bill for $107. I mean, I can't tell you how frustrating that was for me because they just didn't have my mailing address. I never got the bill. So my credit dropped almost 40 points off of a $107 AT&T bill that I didn't even know I have. So these things in place, like I use Equifax.com right now, but you can use anything, Credit Karma, whatever. And it's good to know where you are and to be sent alerts when something has adjusted your credit score. For example, you were overextended on a card, you have a collection, something medical came up, you have an authorized user, you closed an account. You want to always know what's happening to your credit, but don't rely on that score as your actual score. Whenever you're going to buy something, that score is going to be completely different whenever you get a hard hit. So when we pull credit, when you're shopping for a home, you want to do that first. A lot of people go and they go on Zillow, or they go online, they start searching for homes, they get really excited, and they think, oh, well, this real estate agent is attached to this. I'm going to call this real estate agent. Before you do anything, you should always call the lender. Always call your lender. That way we can pull your hard credit. We can tell you exactly what to do. And not all lenders are the same, by the way, but any good lender, and I hope lenders are watching this too, every time you run a report, you should be advising your clients to pay this down, take off this authorized user, hey, you have a collection here, and do a complete, analyze the complete credit report in order to tell them, hey, here's step-by-step, here's what you can do to improve it. Your credit score is great, or your credit score needs work, there's going to be some bumps and bruises, and be able to give a timeline or a to-do list, if you will, to fix that credit. Sometimes that can happen within the 30, 60, 90 days that you're searching for a home. We can re-pull credit at a time. We can run what's called a rescore and get your credit score back up so that we can get you a better rate by the time that you're closing on your loan. So that is, does anybody have any questions for me? I am not getting my questions here. This is my first time to use my computer, so excuse. Let me check this. By law, as a consumer, it would be exactly, Marquita. Thank you. Yes, always get excluded from overextended authorized users. It's so important. Keep your balances low. get with your lender, have them pull your credit, make sure that you are keeping it low, and always have your notifications going. So again, if you have any questions on refinancing or buying a home or where your credit is, feel free to contact us. We are nationwide. We do a credit consultation at no charge to you whatsoever. If you feel like, I can't tell you how many times we get someone says, my credit's not so good, it doesn't look great, I don't think I can buy a home. We pull the credit and it's a 640 score. With, I mean, and I'm like, no, you're great. You can totally buy this house. You can buy a house as low as 550, but we're going to try to get you to the highest score, the highest score that you can. So again, make sure that you are keeping an eye on the credit that you have, and get with your lender and have them pull your credit and do an analysis and tell you what exactly you need to do to get the best rate possible, especially with rising rates right now. Rates are still low. We're still under 5% on most loans. I had someone today, we quoted 4.875, and they said, wow, that score is that rate is so high. And I was like, wow, the rate, that is not a high rate. That we just got really spoiled in the last couple of years with historically low rates. But going back, your credit score means everything. You not only to buy a home, to buy a car. It's, I go back to like the going to the gym thing, or trying to eat healthy. You can build your credit forever. You could pay everything on time. You can do everything right, and the first little bump that you have can drop you dramatically. Like I said, I have that AT&T that I did get removed. But I had the AT&T $107 that made my score drop 30 points because it's immediate. And anything with credit is just like anything else. It takes time to rebuild. And the more time that you have good credit, the longer that momentum is, the higher your score is going to be. The most recent that you've had a hit on your credit is going to be where you get the lowest score. So I hope that was insightful. If you have any questions for us, we're happy to help. We're nationwide. We're happy to do a free analysis for you. We are always here to help you. And this credit talk, I want to do more of it because it's it's so important. We love educating people on this. We love helping people build their credit. We just had another client. I'll just tell this one quick story. We just had a married couple. It was probably the hardest loan that I've done in maybe 5 or 6 years. No kidding. I had this loan. It was a refinance. It was a cash out. We couldn't put the spouse on the loan because her score was too low. Her score was in the low 500s. We couldn't put her spouse on the loan. They've been in this house forever. They had plenty of equity in their home. So we were able to take them from an FHA loan, which has mortgage insurance. It was, FHA usually has a lower rate, it's high, but it has mortgage insurance, so your total monthly bill is higher. We were able to pay off about $20,000 in debt for them, which is going to boost both of their credit scores, basically pay everything off, reduce their payments by $600 or so, where now they can continue to make that $600 overpayment on their new conventional loan, which is lower, and pay off their home. If they made the same payment they were paying, they would pay off not only all their debt is gone, but their home would now be paid off in 11 years if they made that same payment. And they just bought the home 5 years ago. So it's a big deal. And we went from 13%, 18%, 29% on these credit cards to 5% or lower, whatever it was. I think it was maybe about 5% was a cash out. So about 5%, and pay off everything. And then now we're going to be able to, in Texas, you have to wait a year to refinance on a cash out. So in a year from now, we're going to be able to put the spouse back on the loan. They're debt free. They're going to have an intense amount of equity in their home, and their credit scores are going to be up, because that's what's, the credit score is what stops you from everything, from getting an apartment, from, as being a loan officer. and especially I'm licensed in 50 of the 51 states. I get my credit pulled all throughout the year as a soft hit from every single state. I have to have credit on point all the time, because if I don't have good credit, I can't give you money. I can't be an advisor or professional to you if I don't have it. So as a loan officer, I get my credit pulled. I have my FBI background check. I have all these things happening. It affects not only me in my industry, but other people in the industry. It affects all your buying. It affects getting an apartment even. And by the way, if you need an apartment, if you're not ready to buy, I know a really, really good apartment locator in here in Dallas. So, and I do want to talk about that too. No matter what you need, you don't need a lender, you're paying cash. You don't want to buy a house, you want to rent. You need a painter, you need a credit consultant. We work with credit repair companies too, where if it's too much for me to do, if there's a lot going on there, and I'll pull it, I'll analyze it, and I will tell you, here's some quick things that you can do to boost your credit. But if it's something that you need professional help on, I work with fantastic credit repair companies that will help you and guide you along the way if you need a 3, a 6, or a 12-month plan. So for all your resources, no matter if you're trying to get a loan or not, no matter if you just need a realtor, reach out to us. We're here to help you. Whatever I can do to educate. If you have any ideas for me on what to talk about next, I often take for granted the things that we do every day. I talk to people and I forget that people don't know what they don't know, and that things are so ingrained in me. So this has been really refreshing to get questions from people that I've talked about today and be able to provide that back. So I hope that was insightful. I'm really excited to be doing these. I will get better and better as we go, and really hope to be dropping these knowledge bombs on you and help in any way that we can. And my favorite thing to do is teach. So please reach out and let me know what questions you have. If I can't answer to you, I will point you in the right direction. And I hope to hear from you soon. And I hope that was insightful. And I will see you next Wednesday, which we will probably be moving this to 6 p.m. I'm thinking I really like Facebook, but we'll probably try Instagram again next week. But the following week we will do Facebook, and at that point we'll figure out whether we're going to use the Instagram or the Facebook platform. So anyway, thank you. Thank you for all the engagement. I love so many of you that have joined and liked and commented, and I really, really appreciate that, because I really, really want to help as many people as I can. And I love you guys. Thank you, and I will talk to you guys next week.